advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional. G'day everyone, welcome to this week's edition of Bulls versus Bears, your weekly catch up on markets. Welcome Jonathan Takadena.
Hey, welcome everybody. Thanks for tuning in.
Now, this week, look, it's been a positive week overall, and come to the end of earnings season for Australia. I saw some stat before of 178 of the top 200 that have reported. 34 had big beats, 43 disappointed. And the whacking has been a lot more significant than the buying.
Mm-hmm.
But we are, valuations are flashing red into September, and we're coming into a long weekend in the States. So it would be pretty quiet markets until next week, probably into payrolls. So as you can see here, we had Spies eked out a small gain, and we Nikkei as well. China A50 was okay, but really the rebound in the Dow, the S&P, Nasdaq and Russell all happened essentially on Wednesday, Thursday, Friday, to be honest.
Yeah, and one thing I will observe is that see that phenomenon. You can see the Russell's actually outperformed the Nasdaq and S&P in the last week or so. I've noticed the same phenomenon here in Australia. So the XSO, the Small Ords Index, is actually outperformed the XJO. So I think, we always talk about that mindless green robot, how there's that big passive flow. It just seems like it's actually, they're selling some of the larger caps and putting it into the smaller end of the market. So that's one of the weird things that I've seen. And, I haven't seen that for a little while.
Well, I mean, that usually does correlate to when interest rates are expected to go lower. So Russell always tends to do better with lower interest rates. Our small caps high conviction portfolio has absolutely smashed every single other. We got balanced income, or Gary, the growth at a reasonable yield style, which is your BHPs, your CSLs, etc. But the small caps this earnings season, I think there's about 8 picks in there, and I think 6 of them rallied 20% or more.
Mm-hmm.
And they're all doing, and had been doing, there was probably our laggard group for our high conviction. And they've come back with a vengeance. But yes, now just in terms of media this week, we've our friend Kai Chen, friend, colleague and comrade, is currently doing Ausbiz as we speak.
That's right. He's on the last call. I believe it's his first time as well. So yeah.
And hilariously though, because he doesn't necessarily watch it himself, he doesn't know what to expect. So it's funny seeing my old mate. Look, he's nervous. He's going in the unexpected. I said, just watch an episode. It's the easiest one. But Koshi's back. So so I've seen.
I see.
On the last 2
days.
days.
I see you there on the front cover of the Bulls versus Bears. There, I haven't seen Koshi for a while.
Yep. Well, one of us is famous, the other one's me. But it was good to have the big man back because we finally ground the producer into submission, and every time, so we get half ASX, half US stocks now nearly every week that I'm on, which is awesome because half the time I get to be bored and half the time I get to be excited. Look, there was one stock in there from the Australian side that was relatively exciting as an engineering company, but with some pretty hyper growth. But
which one was that? Was it
escapes me right now?
No. Okay. Well, I'll have to watch the episode then.
You'll have to watch the episode. But I hadn't really heard of it. I think it might have been SGR Global or something like that, or SRG Global.
SRG Global. That's been killing it.
You don't want to go anywhere. You don't want to go anywhere near that.
No, you got to get your letters in.
80% of their revenue.
Got to get that ticker correct. Mm-hmm.
Yeah. Don't, for the love of God, don't buy Star. Now, but yeah, look, we did it on the day Nvidia delivered earnings. So I just said the night before, why don't we just go with Nvidia for stock of the day? You know, it is the biggest company, well, basically the biggest company in the world, the biggest story in the last 2 years. To which they obviously obliged immediately, but I was cheating because I had to do that for the morning podcast for the morning call anyway. So that really got my prep rolling for the day. But there's a couple of really interesting ones in there on semi, which we've wrecked before. We do quite like. Mark Morland's super positive on that, and actually he's a holder on that as well. But there was another one called Planet Labs, and I mean, look, we struggled to give a buy recommendation.
Not Rocket Labs, Planet Labs now, is
No,
it?
Rocket Labs actually services Planet Labs because they do satellites.
That's right. Well, you need a rocket to get to the next planet, so yeah, it makes sense there. So
Well,
that's your
no,
supply chain.
they're actually low orbit satellites that take high resolution photos of so Google Maps, etc., etc. So
spy cameras, basically.
Yeah, they can be spy cameras. Apparently they're getting down to the stage where they can almost read number plates, which is kind of scary. Councils are using them to the Wallara or Warunga Council, one of those toffee suburbs. If you chop down a tree, they can now spot you and fine you in your own backyard. So they're using their powers for good instead of evil, of course, not. But they do. Yeah, so Google's a big shareholder in this business as well. So of course, doesn't make any money, but loads because of loads of upfront capex and obviously finding rockets that didn't blow up before Elon got the space industry sorted was pretty difficult as well.
Mm-hmm.
So realistically, but look, and there was another one. Was a networking solutions, and again, it's been a big week. Arista Networks, but valuations were extraordinarily stretched, and I sort of get the bare seat on it as regular listeners will know, without any encouragement at all. But but it was good to sort of see. Well, it was calming for me to see that someone else was like, yeah, look, I like all five. We liked all five of the companies that were suggested. The viewers killed it with the ones they picked. And Palantir was another one. So I got to tell the story of Mr. Nader's pick, which made me as nervous as hell because his first ever recommendation for MPC Markets Global Alpha was the most expensive company in the world. So,
got more expensive.
And we made, I think he trimmed half 5 days later up 43%. And it's now another $30 higher than where we trimmed it. And the boys done a very good job there. And I sort of told the story about, how I called Nvidia, the potential pin-up boy for the AI bubble. But then told the viewers on AusBiz essentially how I went and rechecked my work, and what I've learned from trading over 25 years is, pride's a very dangerous thing. If you're wrong, just admit it and move on. So we've bought Nvidia a couple of times over, I think the carry trade fall and the April fall. We bought it both times. So, but that helped me. That sort of hyper growth only happens in the US. It just doesn't happen here.
Well, I mean, like you released that article on the rule of 40. So I guess once you had a read of that, you're like, okay, so this is how fund managers actually value these kinds of things, and that's how they justify paying up for these super traditionally expensive stocks, but still growing.
Yeah, and the rule of 40 is Nvidia and Palantir. Palantir is 94 in the rule of 40, and I believe Nvidia is the only company in the world higher.
Wow!
So they are justifying their growth essentially. So yeah, it was, and then we got a couple of REITs, and Mark Morland is not a fan of REITs. Let me just tell you.
Well, he's trained the US for a reason. Like he's
gone to 90% US, and
then you give him a REIT from Australia. What's he going to say?
Yeah, no, that's like asking someone to step out of a Ferrari into a 1987 Corolla. And and I sort of said though, look, it's horses for courses. I mean, if you're retired, you're looking for income and you want stability, Palantir is not your stock.
Yeah, exactly right.
Um, so, I tried to be. I didn't give either of them a remote buy. I think I gave them both a sell. But look, it's horses for courses really, and it depends on what your risk profile is, how much you're willing, how much you want to put on the table, and that sort of thing. So while they're a bit more exciting, boring's still good. It doesn't make for great television, I suppose. So yeah, but
Yeah, so
and then
ASX.
ASX, and I just had the investment committee for Ausbiz as well, one of the shortest ones, and and I shouldn't give it away actually because they'll kill me. But one of these stocks was particularly talked about, but yeah, there wasn't much movement. Just to give you a bit of a clue, it's a really good show. It's with Ben Clark and Nathan Summers and Durham. I just sub in when one of them's away every month, which is most months to be honest. It's or every second month, so it's well worth watching. And it's all the double buys from the call over the course of the month. And then there's a fantasy portfolio. I just kind of go in and cause a bit of ruckus, to be brutally honest. And then I get to not be there the next week, which is pretty convenient. But so everyone was very happy to make a few decisions today that Henry's going to be blowing up about next, but I don't have to be there, so it's all good by me. But yeah, so yeah, highlights of the week. JT, take it away, my friend.
Yeah, sure. So Chemist Warehouse or SIG. So what's actually happened there is the founders. First of all, they actually released earnings this week, so a lot of people were waiting for this earnings because that's their first initial report. But the key there
and they gave the full set of books backdated.
Exactly. But the key is that a lot of the founders, their escrow period has ended, and they've sold something like $700 million worth of stock this week. So yeah, good on them. They've had to
still rallied.
Yeah, and that's the key is that even though the founders are cashing in some chips, there's plenty of buying in there, and then that's what we see is that because it's a new entry into the top 20, such a large cap, it's going to get a lot of those passive lows, and I think it heads on higher. So I think that gets to at least 320 from here. I mean, we're only about 7-8 cents from there anyway. ANZ. So interestingly, basically, if you're in upper management, I don't know the exact level, but you are now required to complete at least half of your days in the office, and otherwise you forego your bonuses. So that's interesting. And Eagers Automotive. So they actually came out with earnings and absolutely hit it out of the park. Stock was up, I think, 20-odd% on the day. And
cue the Jaws theme music.
Yeah, exactly.
The shark.
Yeah, the BYD shark. We talked about it months ago, and
you sort of called it when they came out. You saw one on the street, and then I saw a few, and we were like, these things are going to look because they sold out in about an hour or two. Right?
Yeah, exactly. It's just the values. Like when people forget is that the Chinese product, the Chinese manufacturing and their product placement is always we're the cheapest. And people forget that there's some people looking for bargains out there, and the BYD shark.
But it's a no. I mean, look, they've all come out with the hybrid now. Those Utes, but Utes are the top selling cars in Australia.
Yeah, absolutely.
And that thing was at a price point that was lower, and you potentially if you're doing, and they actually do better in the city because there's too much wind resistance for highway driving. It uses too much petrol, but the range is like 1,000 k's.
Yeah, absolutely.
And most tradies, they're you don't put. I mean, I one very brief period of my life, worked at a tyre and wheel manufacturer, and they recommended just putting car tyres on most utes because they'll never see the gravel, let alone off road. So
yeah, absolutely. Yeah, and you just get road tyres.
And most tradies, like if you can do that hybrid, I mean, they're all in city areas, so it's a massive saving for your for your business in terms of fuel because you're probably traveling different places all the time.
Yeah, well, but the thing was, like,
Um,
it wasn't. I knew the shark would be like kind of a turning point for AP Eagers, but the thing is, I've actually seen this play out in slow motion. So the Chinese car manufacturers, this was like maybe late last year. That's when I started to notice that yeah, they're coming, and we're starting to see it in full swing, and that's why AP Eagers is running. Side note as well, BYD has a luxury brand called Yangwang. Yeah, not the greatest name, but either way, they just broke
BYD
the
is a crap name as well, but build your dreams.
build your dreams. Well,
Um,
look, they all they need is someone, just hire someone from England to name their cars because they do everything else fine. But the key is,
yeah, the other one's called like they're marine animals. All the range of the BYDs, the
yeah, they
shark, the
got the
sea lion,
seal, the sea lion, and
I'm
all
just
of that.
waiting for the van to come out. That's the dugong, and it's it'd probably suit my family.
That's it, or is it the whale or something along those lines?
Yeah,
But
exactly.
but to my point, so Yang Wang had they built a specialist car which will go into production, limited production, but they actually broke the land speed record for production cars.
Oh God.
Something like 430 k's. So just understand this. Everyone thinks that China are miles behind, and they manufacture cheap things. But the fact that they're breaking records tells you that they're on the cusp. They're actually leading this parade here. So yeah,
Well, and look,
don't
I
underestimate
would
them.
imagine in the seventies and eighties, everyone was the same conversations went on about well, probably a slightly more racist tone, but about Japan.
Oh yeah,
Um, so
and Korea. When I remember when Hyundai
oh yeah, and look,
came
and
into
I've got
Australia,
to say,
and they were horrible, but then they've just improved over the years,
I,
and
I
now they're leading. Like it's amazing.
yeah, I didn't have really any need for a car for ages. So if if I went back to the farm, I'd always rent one. But so I've rented a bunch of all the ranges of cars. The Kia interior is just as good as most mid-range BMW or Mercedes interiors. And realistically, you spend more time in your car than you do looking at it from the outside.
Yeah, absolutely.
Um, and the electronics is great. BYD, I find incredibly frustrating versus the Tesla. There is a significant difference. But look, I mean, unless you've driven a Tesla, you probably just don't know. So,
Hmm.
and yeah, there's serious range problems. The interface is terrible, and people have range anxiety. And you do a full charge, and guaranteed it's 200 kilometers less. And so you try to plan a trip even, and it can't plan. But whereas Tesla, you put in your destination and it maps your destination for the optimal charging. The range is what the range is actually. So and it puts that in. So I my BYD experience. Teslas you can charge everywhere. BYDs are an absolute pain in the butt because anywhere outside of Sydney or your capital cities, nearly all of the charging stations in the middle of nowhere or at the back of a motel, or they've been vandalised by local kids, or it's just not a I think the overall experience from my but yeah, but like I said, the Korean cars particularly, they have made an incredible step up from was that old Hyundai that everyone had back
The
in the day
the
that was
Excel.
10,000, the X, yeah, it was like,
It,
it
it
was
was
under
like it was like
10,000
$8,000 or something. Like it was
and it
basically
had like a
it was basically
5 year
so cheap
warranty.
that yeah, and everyone said, "Oh look, it's not bad for the money," and that
Yeah,
was the kind
strangely
of
enough, I haven't seen one in a long time. They're not,
well, they've all rusted away, I'm guessing, or they've been
they're
hit.
all
Yeah,
dead.
yeah, yeah.
Yeah. But yeah, and US stock highlights, Snowflake last night.
Yeah,
And
so they came out with earnings, I think aftermarket yesterday, and absolutely beat. Looks great. Chart looks awesome. Like I think
Yeah,
it's
up
breaking
20. It
out
was
to
up
new height.
20% or something.
Yeah, exactly. So that was.
And I'm not gonna let this slide here, JT. That you said that you thought that it was a millennial HR department. That's what. But no, it's cloud services.
Yeah.
Nvidia was
Thanks
about
for putting words in my mouth. Why would I think that?
mate. Yeah, no. Well, exactly. So, I stood up to applaud you when you said it. Don't get me wrong. You know, but anyway, the CrowdStrike cybersecurity did pretty well, but gave some dour guidance. So
Mhm.
that, but it's still rallied 5%.
Well, the thing
Nvidia,
is that's one area within the tech space that hasn't done well, the cybersecurity. Maybe it's kind of just
well,
consolidating
Palo
here, but
Alto went up a little bit last week, but they're I think they also, a lot of them, and I tried this when we were putting together our defense strategy. I tried to find so, but they're not allowed to. They're not really allowed to comment on the contracts they get
oh, okay.
because it's classified. So I've tried to look into it. So it'd be very difficult on earnings to be mucking around with them. But Nvidia, I did a load of focus on. They would have beat if the H20 chips were in there, and they've halted the manufacturing of those, and they didn't even give any guidance for the next 3 months either, and they still beat. So the analysts had that in there. But the price action, I've got to say, has been underwhelming. They started down 3.5%. They ended up in the aftermarket straight after the numbers. Jensen did his thing and made a few comments over the day. They only finished down 1% last night, but that concerns me somewhat. I think that result is actually probably better than most of the previous results. Well, not all of them, but it'd be one of the top two in the last year, and it couldn't find momentum, and everyone's trying to pick holes in it now. I saw a comment. I don't know what happened, but I've been keeping my bearish thoughts to myself, really. And I haven't been tweeting bearishly, but my X feed and my social media turned bearish hard in the last 36 hours. And
Oh
a
wow.
lot of it was
Okay.
based around overvaluation. Multiple people calling AI a bubble, and I didn't retweet them or like them, because I'm really conscious of, you start buying into it, you drink the Kool-Aid, right? And we sort of know that. I try to not retweet or repost those things, because then it just keeps feeding me more and more.
Yeah.
And but Sam Altman came out and said that it's a bubble, which that shocked me a bit. So that was yesterday. I
And it's like,
mean,
didn't you just cash in a big check from all this, and you're calling it a bubble?
yeah. Well, you're the guy that started the bubble, dude.
Yeah.
Like, but that, I think that shocked a lot of people. And I've been wary of the overvaluations, but as JT so wisely taught me, it doesn't tend to go down during earnings in the US, and it just really doesn't. And I've been really waiting for this period in September before I unleash the bear, and but I regretted my bearish call last week. I almost flipped to bullish, I've got to say, because I was like, yeah, I mean, there was no. In hindsight, I was on with Kai, and I was just like, yeah, there's probably no catalyst to push it. He was bearish as well, but when you look at the stats, it's hard not to think it's a little bit overinflated. But yeah, the overall, I think. But look at this. I mean,
Yeah.
but this was the absolute reverse on Monday, Tuesday, and half of Wednesday. Essentially, we had all of these defensive sectors were all green, and last week as well, actually. And all of these bits here have been were red, and that rotation, like, so that Russell versus Nasdaq was even more pronounced earlier in the
Hmm.
week. The Russell was hanging in there, and the Nasdaq was kind of struggling, or limping along. It wasn't struggling. I wouldn't call it struggling.
Yeah, and one thing I
But
have
there's
noticed in this rally, sorry, just to push in, is
yeah,
that that whole financial sector's looking real healthy. I mean, like we're talking new highs for JP Morgan, Goldman Sachs, and even the secondary financials, things like exchanges, and yeah, they're all doing well. So while that plumbing is green, it just shows there's still money pouring into the markets. So yeah, I appreciate that. Yeah, we're heading into a seasonally weak period, or statistically weak period, but we need to see a turn fairly soon, I think. And yeah,
Yeah, look, and my catalyst is payrolls. I think
Hmm.
that payrolls is going to be horrible, and look at it. And if it's not, I'm probably gonna back off. Truth be told, like I'm not absolutely married to this view, but if there quite a few things have aligned. Obviously, just the all of the major indicators of valuation are all 7 of 7 that are commonly used by all of the famous fund managers and all of your standard education and all your economics books, etc. 7 of 7, and 2 of them are severely overvalued. But look, it's also this is kind of industrial revolution stuff with AI, and so whether that holds true or not is a different matter because this part here, like these companies are so enormous and have such clean balance sheets. Like it's not like '01. Everyone keeps going, oh, it's like '01. It's not because
Hmm.
these companies didn't have piles and piles of cash equal to most of the top 10 economies in the world.
Yeah.
So they're going to be more
And
resilient.
what was that stat that you talked about this week about? Oh, sorry, just today. With the
Uh, the
monetization of it.
Yeah, well, I went and then fact checked that actually, and
Hmm.
so it is very choosy with its basically it was saying that the large language models, what their revenue was over the course of, it was only 18 billion, and obviously there's trillions of dollars gone into it. But I just went
Hmm.
through and and actually ran it through my new best friend Grok, and I got some profitability increases, etc. So look, in terms of market cap, we put on in, I think it was just the Nvidia, Microsoft, Google, Meta, Amazon. Um, they have put on 7.2 trillion in market cap really since August 2023, so 2 years. But their revenues have gone up by a trillion. Oh, have gone up by 50 odd percent, or 405 billion, and I think they're attributable to AI was probably about more like 150 billion in revenue increase, and probably 80 odd billion or 80 to 90 odd billion profit increase, and it's contributed to about 4 trillion of the market cap. So whilst that number of 18 billion uh, against 7 trillion in market cap, the chart is very spectacular in terms of like, oh my god, it's a bubble. But if you have a look at it, it's like the large language models they're not the profit centers of these things.
Hmm.
Like Microsoft's gone and on sold a whole bunch of stuff, and Nvidia's selling chips. Like it's not what OpenAI makes. Um, you know, is not irrelevant, but it's not. I I don't think it was a good example, but it was a shocking stat to see. I was like, oh god, I've got to go and look into that. And I was like, because
Well, as
and
you
for
said, like
me as
it could
well.
be very selective. So it could be just anyone that's subscribed to,
Yeah,
chat.
it was just the revenue to those large language models,
Well,
or
there you
what
go. So,
Microsoft and those guys are paying.
mhm.
So, but like, mate, Microsoft's charging their margin on that's probably about 70 odd percent. Like, so yeah, so it was a worthwhile um, exercise going through because it was sort of saying, look, Nvidia's overvalued to fair value. Microsoft is fair. Google is about fair. Meta is a little bit overvalued, and Amazon is a little overvalued as well. Um, and but like nothing was off the hook. I mean, all of them are cheaper than CBA. So I mean, and Wesfarmers and JB Hi-Fi, and I think Nvidia's PEG ratio, which is their price earnings to the forward growth, is still under 1, which means they're cheap. So it's just a matter of, I guess, whether the market, the market market doesn't care about valuation when it panics anyway, so it doesn't really matter. But it sort of, I was more looking just to make sure, if it does dip and we want to buy, like which one's the cheapest. So
Yeah, fair
or
enough.
which ones we want to go into. So yeah, it was an interesting stat anyway. But commodities, mate, what do we got?
Yeah, uranium. That's the main thing this week.
Ooh.
So
Trumpy. He's
yeah. So he's come out, and you actually posted a chart in our chat there about the goal of how many gigawatts of power that they want to generate from uranium. So basically, they have to start building now. It's an amazing chart where it just shows you, yeah, this is our plan for, I think, 2050, was it the end of that chart?
It was, yeah.
Yeah, but we're talking, I think, 4 times the amount of power, and it's not like these nuclear reactors get switched on overnight. It's going to take a long time and a lot of
Well,
effort. Like,
that's why they're pushing into the pushing that small modular reactor. So
yeah.
So yeah, because they're a shipping container and they're a hell of a lot more convenient.
Yeah,
So
exactly. So it's basically you bring around a big battery pack. Obviously it's a shipping container size, but I remember
it just happens the last 80 years.
yeah, and that's the key. You don't have to actually refuel them. Like, basically, I think some of them have a battery life, I think, 10 years, without having to be replaced. Because it just basically just uses the fuel that's in there so efficiently. So yeah, makes sense to me. And yeah, the US has actually been using that technology on their submarines and aircraft carriers for a long time already. So the technology does work.
Yeah, their super carriers can be out to sea for like something like 40 years.
Wow. Yeah.
And they only have to come in for food and drop sailors off.
Yeah. Okay. And so gold and silver, if you look at them on the chart, it looks like gold wants to break out here. It's just above 3,400 on the spot. Silver's just nudging over 39.
I'm
Obviously,
drooling at the silver chart.
yeah,
That thing is.
that looks like it's ready to go. The other metals, not so much. Copper still around that 450. And one thing that's interesting within crypto, it looks like how we talked about money is going out of the leaders into the smaller caps. It's the same thing in crypto. Like, Bitcoin has failed to make new highs, but Ethereum made a new high this week, all-time high. I think 4,600. Last time it was there was 2021, and Solana, that looks like it's breaking out as well. So they're obviously the two blockchains that benefit the most from stablecoin issues. So that's why there's been so much money pouring to there. And obviously, what's happened is what Michael Saylor has done in Bitcoin, Tommy Lee is doing in Ethereum now, and that's what's helped push Ethereum through. So yeah, they're sitting in the right spot. And I was actually just watching so as bearish as you are, Tommy Lee is mega bullish, and he's always been mega bullish. And he's like, this market's going to rally for another 10 years. So interesting thoughts there. Yeah, and
Sorry, is he? Well, and I'm only calling a short. I'm calling a short term dip. I wrote an article about it, and it was more. I did a study around how quickly we bounce these days. It used to take a year and a half to bounce back. It's like under 4 months now. So if there was ever a period we got no earnings, we got weakening job labour market, which is usually, it has very often been a catalyst, and we've got a president who needs interest rates down, and he just installed he fired people. Well, allegedly, basically he's got the IRS to dig around in the Federal Reserve governors, all of them, all of their finances. No, this is actually
he's looking for as many skeletons.
And he's looking for, so he can, and he's found one, and he's booted her, and that's being challenged. They're going to challenge it, but he's got he's got the Supreme Court stacked anyway. So he's going to replace the Fed and push interest rates down. I think we need a breather to have a healthier long-term rally. The last 2-year rally up until the start of 2025 is the best 2-year rally since 1996. But the precursor to that was interest rates coming down from 15% to 3%. And with I guess this is money supply going up, but one of them, they're printing more money. But that's what Trump will do. We'll get rates down. He'll refinance, and he will print money like a madman.
Oh, absolutely,
and
yeah.
then he'll claim victory in the share market. It's I'm the greatest president ever. It's up 100%, and then we will get one of the worst bouts of inflation ever in about 5 years' time. And but that will all be good for the stock market. It just won't be in 5 years' time. So I'm not I'm very short term, but I think if you time it well and seasonally, if it doesn't happen this time around, we will have a lethargic Christmas rally, and then it'll happen in April. Because the other parts of the year, statistically, it's insane to be short. So my best suit now. The more and more I dug into this, and I've done out probably over 100 hours at least in research and all this statistical stuff on these movements, and because the algos are just, it's a self-fulfilling prophecy now, because the seasonality plays into more seasonality. You're mental to be short November to February, and you're mental to be short July or late June, July, August. So they're just parts of the year that it's you're just better off going on holidays if you're a bear, because I don't think there's ever been a significant fall in any of those periods.
Yeah, that's it. Put that suit away and be selective, I guess. That's the.
Well, put the bear suit into hibernation. Is that too much of a dad joke? So yeah, mate. Trade of the week. What do we got? Invictus. Oh yeah, sorry. So PTSD warning here. I'm glad you didn't put the part of the chart on because we've been waiting for this for 2 years.
So just to give the viewers a bit of backstory, on the first kind of rush there, Invictus actually did find plenty of gas in the basin, but what happened was they just found it so hard to get funding, and we're talking, just raising money for the next set of drills. They just couldn't find it. What actually was happening was they were negotiating in the background with some significant parties, and that news came out this week. I wish I had a better alert system with the news, and I missed that first initial bounce. But what I did was, after you actually highlighted that, hey, Invictus is back, I read through the announcement. So the Sheikh of Qatar now owns 19.9% of Invictus. So before all of this happened, Invictus was a 20-cent stock, supposed to jump to 30, but it actually never eventuated. So just based on that, I think 20 cents is pretty much just around fair value for this. But the upside in Invictus, and this is why I recommended it, is that you actually, so Invictus is now 10% holder of AOMOG, which is the actual holding company that is going to invest, I think, close to $100 billion over 5 projects, all in Africa. So, if you just do the back of the envelope numbers on that, that's worth at least 20 cents in share price there. So I think it's well undervalued. There is a news catalyst coming in terms of permitting from the Zimbabwe government to actually go into production. And what held this back was actually funding to get into production.
Zimbabwe is a stable jurisdiction as well. So
yeah. Oh well, not look. It is Africa. I mean, like if this was in Australia, it'd be a much different story. But
that particular area, no, because that's the first thing I check with African projects is the geopolitical index that the UN puts out, and that little pocket around there is not too bad.
Okay, fair enough.
That's the East Coast, I'm pretty sure.
Yeah. So either way, like I did wreck it yesterday. Bought some, anywhere from the 15.5 to 17s. It's still around that 17-cent mark now. But I think obviously, what you'll see is that there will still be a lot of stale holders that have been holding it for all that time. They'll just see this and if you'll break even and you don't believe the story, sell it. They'll just take profit or get their money back. But I do think that having the Sheikh of Qatar on board, I think this will be much higher. Maybe around Christmas time. So that's
I would say cap raising becomes far less of an issue when you've got a sheik on.
yeah, exactly right. Well, that's he's actually guaranteed $500 million worth of funding to get it to production. So yeah,
Yeah, there you go.
that's why I think it's still because it was so it was one of those hot copper stock of the day. Like there's just so much buzz around it. It will be volatile, and there will be some stale holders that need to or want to get out. But I think once they get shaken out and we make some new highs, I think this heads much higher. So that's why it was trade of the week for me. So that's IVZ, Invictus Energy. And as always, if you want to get this from us in real time, just message us. We'll put you on the list as a trial and become a subscriber.
Yeah, just a quick one as well. I highly recommend. This thing is not for the faint-hearted.
Yeah, I know, and I put that in the rec. It's a wildcat.
Yeah.
It's a high risk, high reward play. So size your risk appropriately. So in the actual trade, I said buy it anywhere under 20. The cap raise or the buy-in price was 9.5 cents from the Sheikh. So you put your stop at 9. So you have to risk 50% of your actual initial position to make this worthwhile. So that's
small. Yeah, go small size.
Exactly. So size your risk appropriately, and you got to give it a wide stop because this thing is super volatile. Like it's every cent on this thing, that's a 5% move basically where it's at. So yes,
look, it had a 30 to 35% range yesterday. So
yeah.
Yeah, and coming up on Tuesday as well. Just before we do Fear and Greed, doing a webinar on hyperscaling AI.
Oh yeah.
So yeah, you can register for that. Just check our socials. Essentially, there's links everywhere for that. On the back of a wildly popular. That's why I look exhausted. We did a structured investment around it, and it was basically 3 times more popular than I thought that it would be, and it was the highest selling structured investment we've had by double, if not more. And look, I never know with these things, but everyone seemed to. So I thought, well, I'll apply some stocks stuff to it for those of you who don't do structured products or aren't clients of us, and run a webinar. So that's on Tuesday, Sydney time, 12:30. And just you can find us on LinkedIn, YouTube, or X. Just find our company pages. You will definitely find a link in there, and just click and register, and hear me waffle on for an hour about about the rapid expansion of data centers and the resources we need, and I've got a few stock picks in there for you as well. So
So
tune into that.
Everyone tune in. There's be some great value there from Mark. So yeah, Fear and Greed. I'm surprised it's actually not as greedy as I thought. I mean, like we are at record highs.
It was neutral last week, man. It was neutral. Yeah. So
with all of that,
66.
So I think that because we're not in extreme greed, I think we can just it's obviously going to be a quiet week next week. So I am bullish for next week.
I think look, in my mind, there are risks around. Look, the big show's payrolls next week, so I'm going to be bullish because I think we're just going to drift higher. I think.
Well, don't forget,
I'm a little bit concerned about it.
It's up to Thursday night, remember? So so I'm bullish for that.
Yeah, no, I know it's up to Thursday night. Look, and I'm just going to submit. I'm going to be a 25-star bear next Friday, but I'd be getting in the bunker. But and look, it could very well be wrong, but it doesn't really, in terms of a risk event. But one thing that does concern me about next week is there's no earnings really, there's nothing. That can be a bit of a risk period after earnings finishes if it's a bit frothy. And Congress, it's a long weekend, so Congress comes back and they've got to start talking about the government a government shutdown again.
Oh,
So
jeez.
if that starts to get traction, but this is it's just a circus every time. It was funny. Bloomberg this morning just said, "Look, it won't be an issue. They'll just raise it again because the Democrats don't have the balls to shut down the government." And
Who would?
pretty much
Yeah.
put in those terms. And so I think we'll probably, I think we could potentially get to a shave into the extreme greed territory by next Thursday.
Mhm.
But again, I'm a one-star bull, like I've been for the last 3-4 weeks. I was a one-star bet. This period is just a bit of a holding pattern for me.
Well, I'm more of a 3-star bull at the moment. Like I'm pretty confident that this thing just edges higher. But I do agree.
It would not surprise me in the slightest.
Yeah, but I do agree with you. Like we are at certain close to round numbers, 6,500 on the S&P, 9,000 on the XJO. We might just tick a little bit higher, and then come that payrolls number or some other catalyst. If the algos suddenly decide that hey, it's seasonally weak period, let's start taking some profits. It'll become a self-fulfilling prophecy.
Yeah, I mean, for it to fall back to April lows now, it's got to fall beyond the average of the biggest falls in the last 25 years. So that April low now is 24% away, which is so that's 24%. So we've rallied like 28 or 29, maybe nearly 30%. So it's a pretty significant rally, and this is coming into that risk period. But payrolls has made a fool out of me. What have we done? 82 episodes. So what's 82 divided by 4? It's about 20 times. So I'm sure there's every chance it happens again. But yeah, no. I just think caution's warranted. I'm not death riding the market. But yeah, just statistically for me, I'm very sell side. But and I've been very happily handing it over to you and Mr. Nader to do the recommendations lately. So because you don't send a bear to do a bull's job. So
fair call.
Yeah. All right. Well, that sort of wraps it up this week. I dare say next week's podcast will be extraordinarily thin for information. We'll only have 3 days in the US, and I don't think there's Chinese manufacturing over the weekend, but I don't think we've got any economic numbers until payroll.
We always seem to find something.
Now.
Well, we always seem to find something to waffle on about. So we'll just do our normal thing next week.
Yeah, I might bring those uranium charts next week, so people can have a look at them.
That could be a good talking point.
Do a bit of that. Yes. Now, but yeah, have a great weekend, everyone, and we'll chat again next week. Thanks, JT.
Thank you.